Hello, everybody, and welcome to our market update for the 5th of March, 2026. Glad to have you on board. My name is Raul. I hope all of you are having a terrific day. As we look at the NASDAQ, I've been saying this for the better part of 2 weeks now. I don't want to do anything while we're in the middle of this ribbon, and we have been in the middle of this ribbon now for looks like all of last month and then the little bit of this month. I do find it interesting, though, that the 150-day simple moving average, the old Weinstein indicator, is, pardon me, functioning really well here in providing support to the cues. So if I was to take a trade, and I'm not on the NASDAQ right now, but if I was to take another long trade, and I'll tell you why I'm not. I don't like this pattern where we're going into what looks to be lower highs, lower lows. I need to see a break either above this previous high, and even then, uh, I will not be as convinced, pardon me, as if we get a break above this chandelier area here. So this is basically a trend filter. And right now the trend is bearish. Once it turns bullish, then I'll be a little bit more interested. The play for me, if I was to take this trade here, and again, this is similar to the Walmart trade that we put on, where the stop loss level is such a short distance from the entry that I can take a lot of these small cuts because I know eventually I'm going to get a big move. And if we go back and we look at this here, if I had taken this entry at 506 with a stop at 500, you can see on that small loss, this is a very, very big gain. And that brings me to an important point. All of the testing that Vince and I have been doing over the last 3 days on both systems, it's actually become a little bit of a friendly competition in terms of which system actually performs better. Is it Victory or Velocity? The headline really is that Velocity is a much longer term trend following system, whereas Victory is and this is no surprise to you, that Victory is a much shorter trend following system when a trend has already been established. So the systems are complementary. It was John W. that had sort of pointed me in this direction, and the data certainly does prove it. And on the market chat tomorrow, I'm going to share a lot of insights, some of which I found surprising, and some of which I think you'll find not only insightful, but I think will give you a different perspective on how to trade with these two particular systems. And I'm just going to share one of them right now. Because velocity is a trend following system, and the markets generally, or at least as far as you're going back to the beginning of markets, the markets generally move up. Now, you certainly do get periods like this. This was the Liberation Day situation. Of course, everyone knows about COVID. We know about the 2008 crisis, but markets generally go up. And that certainly makes sense in terms of what I'm going to say next, which is that the velocity system, if you just take the long entries, your performance overall, and we'll share some numbers with you tomorrow in terms of what the expectancy is, what the profit factor is, what the winning rate, what the accuracy rate is. And this is very similar to what the Turtles did with their trading, where the accuracy or the winning rate isn't great, but the overall expectancy and profit is terrific. It's getting to a level that is institutional grade. So I'll share those numbers with you tomorrow. And the system, again, if I'm looking at it, and it makes sense, because if the system goes up infinitely, as it has since the beginning of these charts and trading, it makes sense that when I catch a trend that goes from 500 to 645, it's going to make a lot more money than when I try to catch a trend that goes from 500 to 408 or so. And if we go back even further, it becomes even more clear. So really, really interesting insights. And I just recently purchased some more options data because I really am excited about, and I haven't even scratched the surface on that stuff yet. And the things that I have in my mind in terms of what to do with that data and how to position myself for when an entry actually comes, I think is going to be very, very exciting. And the idea that we're running this over literally thousands of trades. I think on Victory, we ran the test, I think it was over 28,000 trades. So these are statistically significant numbers. And for that reason, I think there is a lot of validity to these numbers. We'll share them with the group tomorrow as we continue with this testing. So back to the NASDAQ here, waiting for a move either above this previous pivot high or more importantly for me, above this chandelier exit. And again, my opinion hasn't changed significantly. I think we do touch the bottom of this ribbon first at 585 or so before we touch all-time highs at six, excuse me, at 635. Now I know 585 is at 23 points and 23 points. I'm a little closer, but I think we're just about right smack dab in the middle between the upper level here and the ribbon level here. So my opinion is still, I think we test this level first before we retest these all-time highs. Go over to the SPY. This one had a test on that 150-day simple moving average. This one's a little bit more clear in terms of the lower highs. So 1, 2, 3, and there's one there as well. And lower lows as well. 1, 2, 3. Okay. Or you can even, if you don't want to count that one, you can count any one of these. You're going to see lower lows. So this one I expect to break if we can't hold at this level here on the ATR. I expect a little bit of support at the 670 level. And I've talked about this often about the index being pinned because of structured products. March 20th, is it March 20th? Whatever that options expiry Friday is. So tomorrow is the 6/13/20. Yes. I think you may see the market hold or go sideways until the 20th. And once those options expire and positions for market makers are unwound, I think you'll see a little bit more volatility the following week. So in this case here, I'm not doing anything. This doesn't terribly excite me one way or the other. A break below here, I may get interested. A break below here, I certainly will get a little bit more interested. We look at the Dow, which was the star performer, and people were talking about the 50,000 level, which we certainly did reach, but boy, did we get turned back, and did we get turned back with authority here. We're now down, what is it, from 50,000 down to 47.9, so 4% or so. It's not here. Let's actually just take a look. So there's the high, there's where we currently are, 4.5%, just about. And you can see then that red dot is or signifies the trend change on the ATR. So this one is a little bit more troubling than the SPY and looks very similar to where we are with the Qs. IWM, before I even put the symbol in, I suspect it's going to look the worst of the group. Actually, no, this looks very similar to the SPY. But when I say similar to the SPY, it also means that this is not terribly interesting to me at this point here. As you know, I have a longer term outlook on the markets. I'm focused a little bit more on macro conditions and looking for that longer term trade. Nothing wrong with doing short term, and a lot of these entries are short term. And I do take them, but my preference is to play the longer game as I find it a little smoother and a little bit of a better fit for my personality. Vince's system, a little bit different. He likes the shorter term ins and outs, and that works for him. And if we're making money doing that, let's keep doing that. Oil, of course, big news of the day, crude oil futures. There we go. So reaching 80, just going to lean in here, 81. Here, as the markets are now currently closed, will reopen shortly. A lot of talk about oil perhaps touching 100. We'll see if that actually happens. I don't think that's outrageous to think that it could touch 100, but when you're in these geopolitical situations, you have to expect volatility. We could come out with news tomorrow that something, there's a ceasefire and something has happened. This is not what I'm expecting, but something, you could get that and you could have a bit of a collapse on the price. And we talked about this. We've talked about this with silver and gold since September, October, and I said, if you're going to be in silver and gold, expect volatility. And if we look at silver, boy, you're that $80 mark. I mean, look at this. We get to a low of 65 on silver futures. We get to a high of 97. We're down to 77 in a day. We're up to 86. We're down to 81. There's that volatility that I was talking about. There's that ATR that's functioning nicely for us in this case as resistance, not support. And here we just tore right through it. And when we broke down from this 100 and where were we here on the silver futures continuous high of 121 on silver futures, and we're down to, we got as low as 60 and change, 62, and we've tried to make a recovery, and I think we eventually we do break through. This is why I did the caller that I did for the retirement account, which was buy the shares, buy the $75 put. This is on SLV, not on silver futures. Excuse me, on SLV. Let me just see what we have here. Okay. So buy the shares, buy the $75 put, sell the $100 call. This was for January of 2027. Total cost or total risk on that trade was about $4, $4.50 or so. And I was okay because long term, I believe in silver. Long term, I think it is going higher. If my thesis is incorrect, I lose my 450 plus, of course, the cost of, or the opportunity cost of tying up $7,950 per trade or per combination. But if that 7,950 turns into 10,000, that's a really good return for me in terms of for that part of my portfolio. So on $80, call it 80, I'm making 20. It's a 25% return in less than a year. I'm I like that. I'm good with that. So from a longer term perspective, this is the kind of alpha generation technique that I'm adding as part of my portfolio. We had talked about good old NAT. My thanks to Richard for mentioning the idea of not selling an option against this, but selling the shares to sort of delta hedge, which has worked out wonderfully. So I had bought the $6 call for 10 cents back when I think this was happening, or was it this? No, it was this. It was on this day. I had the 450 call, which turned into an 85. I bought it for 20, sold it for 85, bought the $6 call for 10 cents. We can review the details tomorrow if you'd like in the market chat. Happy to share that with you. And this is an example of a short-term trade that was speculative because of what I thought was going to happen from a geopolitical perspective. So my only regret, wish I would have bought more. So in this case, this runs up very quickly, gets to about 6 and change. So right when the price was around 6, it was on this day here that Richard had mentioned it. Yes. The delta on my April $6 calls, which were then trading at about 40 cents. So I could have closed that position out for a 4x profit. But what I did instead was I sold 50 shares for every contract that I owned. So now I've got a perfect hedge on. So if this thing runs to 7, 8, 9, 10, it's basically $1 that I'll be gaining for on the option, losing 50 cents for every dollar that I gain on the option, losing 50 cents on the share. So between now and April, I'm sitting in a pretty good position here, regardless of what happens. And you can see there's been a bit of a pullback. So now I'm in this wonderful situation where my options are in profit and my short position is in profit. So wonderful adjustment strategy. So instead of selling a call against that $6 call that I have, or instead of closing out the position altogether and then buying the next strike up, this hedge is working for me exactly the way I would want it to. Let's go over to good old BTC USD, and I know it had a really good, really nice move, and We turned the tide on the ATR or on the chandelier exit. A bit of a pullback today, down 2.1% or so. And that X that you're seeing there is a close or is a stop on the short position that was initiated back here at 86,000 or so. Again, this is not this going back to what I mentioned about how the system functions. I'm not expecting these kind of big trades to the short side. Now on Bitcoin and some of the commodities, this can work, but my preference for trading velocity would be strictly to the long side and have a different system in place for short side trades. And I think we're going to get some of those short side trades probably, I'm going to say late first quarter of this year, if not middle of the year. So Bitcoin doesn't look like it's out of the woods just yet in terms of a long position, but Bitcoin is a completely different animal in terms of the macro structure around it and who's buying it and how people are using it. To me, it continues to look like a speculative asset. So when the overall markets go up, Bitcoin tends to follow, or Bitcoin's going up, the overall markets generally have a risk on type of mentality. So this one for me, holding pattern. Real entry for me would be above 91,000 or so. May consider this for a quick short position down here to the ATR. I'll keep you posted on that. On the watch list, what do we have that was interesting today? Let me pull out the watch list here. This was a gold position that I had bought, and it was a cheap and cheerful at the time. This is one of Sprott's holdings, so I don't mind holding on to this. I am bullish on gold. A good old copper giant, Richard. We talk about this on a regular basis. We go the other way, see what was gaining today. Trade Desk, really? Okay, let's see what the news was on Trade Desk. Okay, OpenAI. Not a bad move. You can see the pain though on the Trade Desk over the last few months. So Vixen, the ultra short, excuse me, the ultra VIX, doing really well today. No surprise there. Open Door having a pretty good day. Snowflake as well. Carvana I do like for a short, but this is very similar to the Tesla story where the narrative actually wins out over fundamentals and the trends that we're seeing on the chart. So this one got to be a little bit more careful. Option prices on Carvana, of course, are to buy them, they're very, very expensive. So a spread here may be in order. I'll keep you posted on that as well. All right, we are back with our next next market chat tomorrow, which is Friday at 1 p.m. Eastern. I'll send out the link for that shortly. In the meantime, enjoy the rest of your day. We'll see you tomorrow.